We had a lot of earnings out last week in the tech sector, with disappointments from the likes of Alphabet and Amazon in particular. This week sees Facebook and Apple out with their respective third quarter numbers. While the two are very different tech stocks, both have the potential to be market moving for the sector. Alex de Groot joins us now from de Groot Consulting. Alex, good to talk to you. First of all, let's take a look at Facebook. What will, in your mind, will be the defining feature for this quarter? Because Facebook has come out on the worst side, if you like, for a lot of issues recently, especially around regulation and the security of data.
You're absolutely right. I think the company will be at pains to point out that they are acting conservatively, ethically, and in the best interests of users. There have been ongoing concerns this year over data privacy, and of course the rumblings from the 2016 US presidential election. So yes, I do think the company will have a safety-first approach. They have signalled that to the market. They have signalled this will be a year of higher OPEX and probably slower revenue growth. But whether the market's prepared to accept that is another thing, because of course we're so used to Facebook beating expectations and outperforming the market. I suspect Q3, the tone coming from the company might be slightly conservative.
Okay, we've seen shares drop from $220 all the way down to $148 for Facebook, and I know this is one of the big concerns that's been dragging down the Nasdaq and so forth. What is being priced in at these levels? Are the investors being overly cautious, overly pessimistic, do you think, and Facebook could deliver on the upside, or do you think that there is genuinely more that we don't know about that could affect Facebook shares negatively?
Sure, I think the risks are probably slightly on the downside here. Both in terms of sentiment and also the actual stock price, and that relates partly to what we've discussed there in terms of costs related to compliance and data privacy, but also in terms of the sense of a growing burden of regulation surrounding Facebook and more broadly the social media giants, and that could extend to, for example, an extra tax burden as well. So I will be positioned in quite a risk-averse way in respect of Facebook, both in the near term and also the medium term, until we get through this period of intense scrutiny. Where
does it see the next area of growth that it could have?
Instagram and Instagram stories and video-oriented advertising. The viewers and the listeners may know that Facebook's profile is predominantly at the slightly older age groups these days, so the bulk of the growth comes from the Instagram product, which is pitched more at the visual audience and is pitched more at the age groups, let's say millennials and up to 35. That's where the growth is coming in the US and, more importantly, outside of the US. Facebook has over 2 billion users, but the growth potential now is going to be fairly and squarely in markets like Asia.
What about Europe? We hear a lot about protectionism from Europe. The GDPR issues, the data protection issues have hit Facebook, of course. Is Facebook keen on Europe, or do you think there's a good reason for them to head for Asia rather than Europe in the current climate?
Well, they're investing a lot in the UK as a base for Europe, as is Amazon and as are other of the big social platforms. So they're committing capital to Europe and to the UK, but Europe isn't really growing as a population centre. So no, in terms of user momentum, that will be Asia. You may be aware that they recently won the rights, for example, to stream La Liga, the Spanish football, in Asia. And they see sport and streaming as a battering ram to knock down the door to growth in Asian users. So that's a message I think you'll see coming from the company, picking up more sports rights to stream overseas to win users and to drive advertising.
I just want to pick up as well on the point you made about tax and where general sort of regions are aiming fairly and squarely at some of these tech companies in order to try and grab more corporate tax from them. Is Facebook likely to suffer from that, especially here in Europe? As I said, Europe is particularly keen on finding ways of levering back more tax from these large corporates that don't declare large profits.
You're absolutely right. There's a big movement, which is EU-wide, and partly also relates to the fact that traditional media is under intense pressure, and that they're not getting paid properly and effectively and efficiently by the big social giants. So there's definitely a movement underway to get the big tech guys to pay more tax, whether that's a tax on revenue or a tax on profits. it's too early to say, and there will be intense lobbying by all the big social platforms to avoid this. But it does feel as though politically there is some impetus to get these guys to pay up more. I think it's a tricky one because basically investors don't like the fact that that the earnings stream from Facebook could be affected by additional tax. But at the same time, the question is that a price to pay for further penetration and further growth? As I say, in the near term, I think the risk is on the downside for Facebook.
So negative outlook potentially for Facebook. How about Apple? We've been hearing so much from Apple over the last few years about new products, including electric cars and so forth, and some of these new areas they want to get in too. But it seems to me that Apple is effectively still a one-trick pony with the iPhone.
You're absolutely right. I mean, they've recently just launched a new series of iPhones, and so the outlook for sales of those products will be a key determining factor in terms of the revenue outlook for Apple into 2019. Nothing that they offer in terms of product can compensate for the success or failure of the latest generation of iPhone products. So the selling price and the success of getting consumers to replace their existing iPhones will remain the biggest driver of Apple. I would say if you take the broader media landscape, I would have Amazon and Netflix and probably Facebook ahead of Apple in terms of smart TV and in terms of the media outlook. So, for example, at these figures, these upcoming Apple results, we want to know a little bit more about their ambitions for advertising and their ambitions for original content. Because we know, for example, that Netflix has stolen the marks from everybody in terms of the home TV sector. What does Apple want to do here? How do they want to evolve in this space? We haven't heard a lot about that.
Okay, when I talk this next question through, I want to bring up a copy of the share price chart because Apple hasn't retrenched as much as, for example, Facebook has, and of course it hasn't either tracked the NASDAQ either. That drawback in Apple shares have only just taken it down to just above the $1 trillion market cap mark, which of course is the first company to pass through earlier this year. What is Apple pricing in? Because with these relatively elevated levels of stock price compared to some of the other tech stocks, I know they're not comparable in terms of product, do you think that there is downside for Apple?
Sure. I mean, I think the way to characterize Apple is that the market doesn't really know what they're going to do in services. To my point about developing a content business and a service offering outside of the iPhone, it's too early to make a judgment call on that. We know more about what Amazon are doing. We know more about what Facebook are doing. We don't really know what Apple are doing. We know what they would like to do, but the detail isn't out there yet. So I think at the moment the market is prepared to ascribe a decent multiple for the sort of low-margin hardware business and then have a bit of hope value or opportunity value around the services that they want to develop. What do I mean by services? I mean the App Store, I mean music, I mean TV, I mean advertising. So yes, you're absolutely right. Let's disconnect Apple from the other FANG stocks. I think there possibly is a little bit of downside if they're not able to talk the story around the services segment, which is where investors are factoring in that hope value. And that would all be new news for the stock.
Okay, look, Alex, we'll have to leave it there, but thanks for joining us for this look ahead to earnings out from Facebook and Apple. That's Alex de Groot from de Groot Consulting.